Good afternoon. This is the Chorus Call conference operator. Welcome, and thank you for joining the Tinexta Group consolidated results at the 30th of June 2025 presentation. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and zero on their telephone. At this time, I would like to turn the conference over to Mr. Josef Mastragostino, Chief Investor Relations Officer. Please go ahead, sir.
Good afternoon and good morning to those joining from abroad. Thank you for joining Tinexta's 2025 first half results presentation. Oddone will be joining us in a few minutes, but in the meantime, I will kick it off. As a reminder, all the relevant documentation of the first half 2025 results can be downloaded from our company website in the Investor Relations section. For the purpose of this call, I will cover the key strategic items of the call, and then we will go over the first half 2025 results and from the financial point of view, as well as the business units' performances, providing you with a deep dive. The last part of the call will be dedicated to Q&A, and as a reminder, our recording of this conference call will also be available on our company website, and it will be posted upon completion of this call. At this point, I will kick it off by turning to page 5 of the presentation, which you can find, as we said, on the Investor Relations sections of the company website. Let's go over some key group financial data. In particular, as of the 30th of June 2025, revenues were up 16% versus prior year, growing double-digit versus the prior year. Interesting is also the growth in terms of EBITDA adjusted, which came in short of 1,040 million. It came in at 39 to be exact, growing 13% versus the prior year. EBITDA on a reported basis was 33 million, growing 29% versus prior year, following the considerable lower number of one-offs and non-recurring. The net profit on an adjusted basis came in at 8 million. The net financial position was strongly improving versus the fiscal year 2024 number, coming in at over 300 million. I think it's worthy of mention that the free cash flow on an adjusted basis was very strong, growing 86% versus the prior year and reaching almost 50 million in the first half of 2025. We will discuss more deeply on the components of free cash flow later in the financial section of the presentation. Turning to page 6, we're highlighting that first H results came in double-digit in terms of growth, with an expected acceleration in the second half. Let's deep dive directly on EBITDA, which, as we said, came in at 39 million, growing 13%, and that performance was mainly driven by the growth in cybersecurity with the integration of Tinexta Defense, which is performing very well. Ascertia's contribution in the digital trust area is still light, expected to come in the latter part of the year, or more precisely at the end of the year. In terms of business innovation and ABF, the performance is still lagging given the persistent macroeconomic uncertainty. In terms of BI, in particular in Italy, we're still witnessing some general delays in subsidized finance in Italy, but we're due to recover in the second H given the very strong pipeline. EBITDA on a reported basis was 33 million, growing 29%, as we said, driven by lower one-offs and non-recurring. EBITDA adjusted margin was just shy under the prior year at 17%, and the EBITDA reported margin was higher at 14% versus the 12.6% of the prior year. EBIT on a reported basis was negative 19 million due to some impairment of goodwill related to acquisitions, which we will detail later, and they're also available on our financial statements report. EBIT adjusted was 18.3 million. Net profit adjusted was 8.4 million, while net profit on a reported basis was negative 7.5 million. Again, we will see what is moving going down the P&L when Oddone will go down on the on the financial statements section. Net financial position, again, 300 million. The decrease in the net financial debt in the first semester is attributable to the increase of the free cash flow and the positive adjustments from put adjustments that we recorded during the first half. Free cash flow adjusted was 48 million, and 1H cash generation was driven by favorable net working capital dynamics, decrease in CapEx, as we had anticipated back in March, and lower cash taxes. Net financial position over LTM EBITDA adjusted was 2.6 times versus the 2.79 on a pro forma basis on December 31st of 2024. Brief highlights on the business unit. Digital Trust grew around 5% on the top line, flattish to partially positive, 1.5% growth in EBITDA. Margin is still attractive at 28%. Cybersecurity, very strong growth, 46% versus prior year on the revenue base, and EBITDA was over 130%. Margin strong at 14%. BI sees a growth in terms of revenue, while we see a decline in terms of EBITDA, and we will discuss that later. In terms of recent events and updates, we highlight that there was a transfer of Defense Tech shareholders' equity into Tinexta Defense Holding by Starlife. This is basically just a corporate governance aspect that we can see. There was, very importantly, the exercise of the call option for the 25% stake in ABS, which was paid only €1, and that followed the subsequent exit of founding managers. Also recently, and it was still recorded in the first half, the acquisition by Tinexta Infocert of the Digital Trust division, Linkverse, which expands, therefore, the operations of Digital Trust in the private and public healthcare sector. Lastly, from a Tinexta Defense point of view, we recently launched a proprietary cipher, which was developed by Tinexta Defense, and it has the so-called dual-use functionalities, working both for companies as well as institutions. Let me turn to page 7, where most of the comments is here, or the comment of the numbers have been highlighted. Maybe it's important to highlight, the growth again of EBITDA, which is still being around, double-digit levels. Page 8, I think it's important to remind the market that, and therefore stakeholders and shareholders in general, that the overall expected second H, given the performance of first H, is going to be very, very important in terms of percentages. You're looking at another important year where the second H performance will be around or more than 70% in terms of weight in terms of EBITDA. You can see that here, basically in the first half, we grew versus the prior year, both in terms of EBITDA and also in terms of revenue. Let me stop there and turn it to Oddone for page 10 on the results and the BU's deep dives.
Thank you, Joseph. Good afternoon, everybody. As already introduced by Joseph, here at page 10, you see how the group was able to perform a double-digit growth, both in revenue and EBITDA, basically almost aligned to our expectation. If we walk through for each division, and I will deep dive later on, we have Digital Trust that is growing 5.4% in terms of revenue and 1.5% in terms of EBITDA. Obviously, these figures have been impacted, as already anticipated during Q1, by the fact that Ascertia during 2024 delivered most of the sales of one-off product and license during Q1, while this year they are expecting to be delivered down the road during the year. If we are going to neutralize this effect, and I think this is very important, basically Digital Trust, especially Infocert, are growing basically at the same pace that was projected at the beginning of the year. Cybersecurity overall is delivering very strong results. We have the revenue going up by 46%, especially mainly driven by the growth, mainly driven by the results of Tinexta Defense. Former cybersecurity business deliver a flat revenue, but a significant increase in EBITDA that grew in the range of 18%. So the first half is very positive, and basically it's happening everything we were waiting to happen during the plan presentation. Business innovation, the revenue is up both in absolute value as well as in organic way. In terms of profitability, we are a bit slightly below our plan, mainly driven by the fact that compared to our initial expectation, the level of revenue coming from ABF and from Tinexta Innovation Hub, from the finance and grants part, the revenue was there, and also the profitability expected, while we are a little bit late in digital innovation and ESG, but again, for us, is a phasing subject. If we walk through page 11, you see here, we try to segregate the digital trust without Ascertia. So if we exclude what's happening in Ascertia, we are going up 2.6 million EBITDA, that is exactly in the range of 7-8%. So is exactly we were expecting. Ascertia, we expect this couple of billion EBITDA to be delivered between end of Q3, Q4. Cybersecurity, as I mentioned, if we exclude obviously Tinexta Defense, is improving mainly by the cost reduction, as already anticipated during Q1. And if we walk through the business innovation, we have the marginality of finance and grant basically align with previous year, despite a higher level of revenue, while we are suffering as a phasing in the first part of the year, both in ESG activity as well as digital innovation, but most of this delay is planned to be recovered in the second part of the year. And then we are adding up the results of Lenovis that last year was not consolidated in Q1, and obviously Tinexta Defense that has been consolidated starting from August 24. Overall, the revenue is going up 13.3%, moving from 34.4 to 39%. If we go at the P&L, the business-related part of the P&L is, like I mentioned here, you see, EBITDA going up at 39%, 16.6% EBITDA margin. We have to remember that the most important part of the business is happening especially in cybersecurity and business innovation, the second part of the year. Last year, we delivered a 17% EBITDA. The business innovation is the main driver, with a timing decline of 4 percentage points compared to previous year. Non-recurring costs are below previous year. This cost includes 5 million costs mainly related to internal reorganization, where we are going to lower our recurring costs we did some action in order to lower our people-related recurring costs, and on an organic basis, basically the number of FTEs is not far. It is basically equal to the previous year, so we are planning to be in a more favorable position approaching the second half of the year. When we look at depreciation, amortization, provision, we have to keep in consideration that here we have a change in application of an accounting principle. Is a change that we decide to apply also after having changed the auditors, that we change starting from this year. What's happened here, as you know, during the month of May, the Tinexta and basically Tinexta Innovation Hub decided to exercise the call of underperformance related to the 25% of ABF. So we performed this step. So the founders are now out, and so we had basically a gain of that pass through the P&L, a gain of 12 million euro that have been included as a profit in the financial. In the meantime, we adjusted for an amount of 60 million euro the goodwill that we had on ABF. So basically is a balance sheet part where we have lower debt and lower goodwill. In the meantime, we had to reclassify, compare to the Q1 reporting, but all figures here have been restated. So basically, the cancellation of the put of Ascertia for 6 million euro that declined our debt has also been recorded now as a profit that still is accounting in financial charges. The remaining part of the write-down has been basically driven by the increase of the weighted average cost of capital. We rectify our amount of goodwill in Setteroff for 1.6 million euro. Overall, if we combine the profit that we get from the put cancellation as well as the adjustment of the goodwill, more or less we are in the range of 90 million euros. So on the net profit is not impacting so much, but you can imagine that it's quite reasonable if you decline debt. Also, the goodwill is gonna lower. So this is the main driver of these figures that have been quite significantly different from the previous year. For the rest, I think that obviously in this first half we accounted 2.5 million euro more in the net of financial interest, driven by the fact that this year we have the full debt in the first half of the acquisition of ABF and the acquisition of Defence Tech, while last year we had in the books only the debt related to the acquisition of ABF. And in the second part of the year started to counting the interest for the acquisition of Defence. If we move to page 13, we have basically the adjustments on our P&L. We have a lower adjustment compared to previous year, and non-recurring service costs are partially related this year to rebranding activities, while non-recurring personnel costs, like I mentioned before, are related to optimization of the cost basis. I think I already talked about the changes that we have in non-recurring drawing down as adjustment of non-controlling interest. But anyway, these are the most important part. We are booking into our P&L 12.6 million euro of amortization driven by the purchase price allocation, as well as the 12.4 of last year. The balance sheet, obviously, the balance sheet has been favorably impacted by a very strong first half cash generation. As we were expecting after a weak 2024, driven by, like we said very clearly, non-recurring, I would say, CapEx that allow us to invest in some project evolution, as well as they help us in the reconfiguration, I would say, of all our data center and the cloud approach and whatever. So now we are running basically more recurring CapEx, and this has had a positive impact on the cash generation. So the net invested capital dropped almost 50 million euro from the end of the year. Very strong has been the net working capital, organic net working capital decrease, as well as the decrease in fixed assets, despite the increase of 8 million driven by the acquisition of Linkverse by Tinexta Infos. Net financial position, like I said, has been lower by more than 20 million. On top of the free cash flow, the very strong free cash flow generation, we had the distribution of dividends. We had the acquisition of 8 million of Linkverse, but on the contrary, we had the opportunity to improve the net financial position also by the elimination of the put adjustments between Ascertia and ADF. If we move to page 15, like I mentioned before, you can see here on the right part of the page a very positive improvement of the cash generation. And if we look even at the LTM, on LTM basis, I think we delivered the best LTM ever cash flow generation, where we peaked 64 million euro. That if you consider that this has been also combined with a weak 24, is absolutely a very positive result. I would like to underline also that Defense Tech, Tinexta Defense, now renamed Tinexta Defense, has delivered a very strong Q1 in cash generation. And this is something we were looking very carefully, and this is a strong support to our decision of invest in Defense Tech, and we were able to free this capability of cash generation. I would say that page 16 and 17, I would say have been already mostly already commenting the results. Here, at page 17, you see over the last year, the group invested more than 70 million euro in acquisition. We are talking about Defense Tech and Linkverse, basically in the last 12 months. while we had a put adjustment of around 40 million euro. Now, despite this acquisition, we have a net financial position that is now at 2.6 times the EBITDA, and still we are entering in the part of the year where we are going to deliver most of the EBITDA. I move now to page 19, talking about Digital Trust. Like I said before, the core part of the business is progressing well, and we have some good news. Legal invoice up 12%, and I would say following also part of the investment we made last year, the online sales are growing on a 10% pace. That is definitely a very strong result that is supporting, the marginality, but as well as the cash collection. Trusted on Board platform grew 8% due to the recurring revenues, subscription, and renewal from loyal clients. So again, on DGM, still a very positive result. Legal said revenues are down 7%, but like I said, they are driven by the delay in sales of Ascertia PKI products in the Middle East, North Africa, for which we do expect to materialize during the second half. So the growth that is 1.5% could appear disappointing, but again, if you take apart this timing issue related to Ascertia, and we have seen from the product rate of growth, we are on track. Cybersecurity, as already shared during the plan presentation, we very well knew that most of the recovery of profitability would have been driven by a cost control. Definitely, level of growth of the market on the two arenas where we are playing are not so exciting, but in the part of traditional cybersecurity, but we were able to still improve our profitability from 4.1 to 4.8 million euros. If we talk about Defense Tech is delivering exactly aligned with what we were expecting. We anticipated also during the investor presentation in March that our projection was supported by a very strong backlog, and this is going to is happened during Q1. It's happened also during Q2. The EBITDA margin is lowering as we knew well in advance, still at the moment of the acquisition, due to a different mix between basically we are operating even more and more as a main contractor, and sometimes we have to resell hardware or other components that are delivering lower margins in percentage, but in absolute value, we are growing exactly as expected. So the level of backlog is very strong. We are reinforcing our capability to deliver the projects in this area. If we talk about business innovation, I already anticipated that in this area we were expecting actually during Q1 a little bit more revenue coming from ABF project to be delayed from the end of 2024 to early 2025. This occurred, but not at the level we were expecting. In ABF, in the French market, now is unfortunately, and this is one of the reasons why we basically updated our goodwill value, is that the market in this area has dropped. The success rate of the filing went down from 65% 3 years before the acquisition, and then when the France went into political struggling, this kind of success rate has dropped to in the range of 42-43%. So we are approaching, after having laying off the funders, we are approaching the market when the market was growing 70%, was having a success rate of 70%. Volumes were the drivers. Now we are approaching the market in a more selective way, trying to improve the success rate through a more selective selection of project to be driven. If we move to the Italian market, what we are observing here, definitely, as always, the second part of the year will be the key part of our profitability. We are observing here that compared to initial projection, the level of we are observing a switch between 4.0 to 5.0 solutions. So the customers are switching there. So we have already on hand, basically, the backlog that we need to deliver the results. Now it's a run that we are performing together with our clients to complete the project, to complete the investment, and to deliver what's needed by the end of the year. So before leaving to Joseph for the guidance, like I said, we do not see major issues in delivering Digital Trust results. We have the open points on when the Ascertia is going to deliver. In cybersecurity, overall, it's almost, we do believe that the forecast is continuing from to the first half is going to be very solid. On the business innovation, we already factorize into our guidance, the better result of ABF, even though not aligned with our initial projection. But overall, we think that if we are able to deliver the orders we have on hand for 5.0, we should be almost in the range of our projection. So I will leave now to Joseph for the closing remarks.
Yeah, thanks, Oddone. So to wrap it up on page 23, let's quickly go over the financial guidance. Given all of the above, we confirm guidance in terms of revenue, growing 11% to 13% versus prior year, of which 7% to 9% organic. EBITDA is confirmed as well, growing 15% to 17% versus the prior year, of which 10% to 12% organic, while we actually register an improvement of the leverage ratio, which now is a leverage ratio meant as NFP over EBITDA adjusted, which is now foreseen at 2.1 times to 2.3 times versus the 2.2, 2.4 times communicated back in March. I think the levers behind that have been extensively discussed during this call, and obviously referred to the exercise of the call option at a very attractive rate in terms of ABF. I will stop there, ask the operator to open to Q&A, and we are available for any doubts and any further developments.
Thank you. This is the Chorus Call conference operator. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. To remove yourself from the question queue, please press star and two. Please pick up the receiver when asking questions. Anyone who has a question may press star and one at this time. The first question is from Russell Pointon with Edison Group. Please go ahead.
Good morning. Good afternoon, Oddone and Joseph. Just a couple of questions, if I may. First of all, in terms of Ascertia, you've said there has been this deferred revenue effect. So I'm just wondering if you could just give some background to why that revenue has been deferred. I appreciate it does move around a bit, but is there something from a customer perspective, etc.? And then, so it is a question on the overall guidance. If I'm reading it correctly, you sound a bit less. It sounds as though the guidance is going to be delivered in a slightly different way than you probably anticipated at the start of the year, with business information being a bit behind, and digital trust and cyber doing pretty well. Is that right? Thanks.
So, Russell, let's wrap up on Ascertia. It's basically deferred revenue. Yes, this is a calendar aspect in the sense that they were supposed to close during their fiscal year closing, which corresponded to March the 31st, which they did not. And therefore, we are expecting a full recovery by the end of the year. Again, these are just contracts that were supposed to come in. They did not, and they're expected to come in the latter part of the year. In terms of, we said this in Q1, and we're confirming it again now. In terms of the guidance, what we're saying is that overall, on a numeric base, the ranges are fully in effect. So we have confirmed both, revenues and EBITDA, and then the leverage ratio instead is just a function of the put call option adjustments, favorable adjustments that we registered. Notwithstanding the fact that BI is a bit behind in the first stage, we have a very strong pipeline. It's all about the delivery in the latter part of the year, the latter being mostly the end of Q3 and Q4. Let's be very, very clear on that. And again, more than 70% this year of group EBITDA will be generated in 2H. Full stop.
Okay. Thanks, Joseph.
Again, if you wish to ask a question, please press star and one on your telephone.
Given that there are no more questions, thank you very much for the attention, and we'll keep yourself posted on any further news. Bye.
Bye. Thank you.